I firmly believe that a property's performance is 90% staff. If they buy in, if they're good, if the residents like them, if they communicate well, they can make anything work. If you have bad staff, whether it's the office staff or the maintenance staff, you're going to have issues.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. With me, I've got Daniel Simpson today. Daniel, how are you doing?
I'm doing well. Yourself?
I'm doing great. So Daniel Simpson is our Director of Asset Management at Endurus Capital. I want to bring Daniel on. First of all, I guess let me introduce Daniel a little bit and I'll let you introduce yourself. But so Daniel's been in the business for, 35 plus years, a long time. You've seen a lot over the years from property management side, asset management side, really across the board. So I wanted to bring you on to kind of just talk about things you have seen in the industry over the years and the experiences that you've had and how you position that in today's market and what's going on. So Daniel, welcome to the show. Anything else you want to tell the listeners about your background?
No, going back 35 years is enough information for almost anybody, probably. But I do have, I think one of the things I bring to the table is I have the property management experience along with the asset management experience, a little bit of ownership experience, investor experience. So I have a little bit of everything in the pot.
Awesome background, 35 years. That's a lot of experience. Daniel, I just want to kind of talk about asset management. I think it's a topic that most people just kind of glaze over, right? It's not exciting to talk about asset management. It's exciting to talk about the acquisition. It's exciting about talk about the raising the capital. It's exciting talking about selling the building and making profit, but it's not exciting talking about asset management. And that is actually the most important aspect of the entire process, is making sure your property is running properly. Otherwise, you don't have much of a story to tell. So let's talk through kind of property and asset management, your experience. Start us off with just what you're seeing today as far as the key challenges that are maybe unique to today's market, or maybe they've been there all along for the last, 35 years, but some key challenges that you're seeing out there today.
Sure. So some of the things that have kind of remained the same, and this is part of the property asset management, is making sure the property management company is aligned with the investors and ownership group's goals, and kind of continuously steering them towards those, because they tend to veer off. But some of the key challenges we've seen in the last few years, in particular, is payroll, salaries. And then finding people, post-COVID has been really difficult or challenging to find good employees at any price. So that, I'm sure, as most people know, is kind of shredded some pro formas. Whereas we were writing, $1,100 per unit per month, per year. Some properties approach 2,000 now.
Yeah.
And even then, turnover in the employee section is kind of high. So as an asset manager, I try and assess the ability of the property to maybe meet a higher payroll, and offset that with some additional revenue somewhere else. And then, of course, try and make sure that we're acquiring the best possible employees for the property that are efficient. Not just directors of maintenance, for example. We need people that go out and do stuff. So I help identify that as well. But that's probably the biggest challenge I've seen. And of course, there's taxes and insurance that are issues. They've always kind of been issues. I mean, taxes always go up, insurance rates always go up. But there's been a multiplication factor over the last few years, again, kind of since COVID, that's been unseen in probably 2 decades. and that has to be overcome. And that's a challenge as well when you're working with the property management company.
Yeah, and just so people know, asset management. We're talking to Daniel about asset management. What he essentially is doing is he is the between the you got the ownership, right? And so your ownership, your investors, all that, and then you've got your property manager. And the property manager could be in-house property management, it could be third-party property management. But then the asset manager is the one that's kind of saying, this is the business plan from the ownership group. Here's what they want to achieve. Here are the financial aspects they want to achieve. Here are the overall renovation aspects, everything. Like, we're looking at the whole business plan. The asset manager is looking at the whole business plan, and he's going, okay, property management company, here's how we're going to implement and make sure we're staying on track for this business plan. And so Daniel is kind of this in between, saying, well, we got to stay on track. Here's how we stay on track in managing expectations and making sure that the actual boots on the ground are doing the job that they need to do in order to achieve the business goal, right? So, payroll. You just talked about expenses. I thought that was very timely. I just read an article, and this was Louisville based, and we have assets in Louisville, but one of the sections of it was talking about income and expenses, and the expenses, and it broke down expenses as for line items. I think it was 4.9% was what the expenses were increased year over year in an apartment in the Louisville market. And as you mentioned, payroll was up, I think 7.9%, 7.6, 7.9%. Insurance was up double digits. I can't remember. It might have been 14%. Admin was up like 10%. So some of these numbers are up pretty significantly, and that's creating a challenge. And then payroll, just finding good people. You're right, and that's a big challenge. One thing that we've done, Daniel, and I think, or you have driven, is let's go with quality. Why are you focused on quality and not, I mean, not that you're not caring about the budget, you certainly care about the budget, but you're saying, look, I'd rather have somebody quality that's going to be over budget than to hit budget. Like, explain that to me.
Yeah, so property management has very similar goals to ownership and asset management, but one of the differences is when they develop their annual budget, they really try to hit that budget number because there's financial incentives involved with that. On my side, the incentives are driven by what ownership wants and needs, and what the investor base is expecting. So sometimes to do that, a more expensive, more qualified employee is more productive and ends up being a cost savings. For example, hiring somebody that's capable of doing HVAC, plumbing, and make-readies at a smaller property is much more beneficial than just hiring somebody to do general maintenance work, because then you don't have to contract. So maybe you give somebody, just as an example, $25 an hour that can do everything versus $20 an hour that can only do one thing. And sometimes it's hard for property management companies to get out of that tunnel vision because they're trying to meet budget so that they can hit those financial goals, their internal financial goals. So that's what I help drive. And that's why I think quality employees, they're more expensive. A few years ago, they were $17, $18 an hour for a maintenance guy. Today, they're 25 plus.
Yeah,
I've seen them at 30. It's pretty incredible. But hiring the right ones at the right price that have the right knowledge makes perfect sense.
Yeah, same thing with property operations or financial operations, right? Your staff, your office staff.
Mm-hmm.
Look, I mean, if I have somebody that doesn't really care or is just not that good, maybe they do care, but they're just not that good. All of a sudden, my property starts suffering with occupancy. I mean, we've seen it real time at several of the properties that we own, and it's if we're doing that, all of a sudden, instead of 95% occupied, we're 80, 98% occupied instead of 98% collections. We're at 94% collections. It starts to add up, and that really hurts the bottom line over the long run. I could have paid somebody more money to do a better job, been at those higher occupancy rates, higher collection rates, and in the end, we're still winning, and we've got a better. I mean, it's just a better environment, better property to be at.
Yeah, that's absolutely right. And when you have a higher quality office staff and a slightly higher pay rate, they also buy in better to the goals of the property. They understand the goals better. They have a little bit more knowledge and generally more experience.
How do you
Uh,
get somebody to buy into? That's but a
mhm.
big thing that I've seen. Like you either have people that buy in and are they're ready to go, and when you say, look, we're going to raise rents by whatever it is, 20, 30, $50 a month, they're like, all right, I'm up for the challenge, let's go. And then you've got the other ones that are like, ooh, well, I just don't feel like we can do this. Like what is your how do you motivate people to buy into the business plan, or is it something that just you can't do?
Yeah, so it is a challenge. There are two types of employees in general. There are those that already understand and will buy in. They're motivated internally that way, and there are those that are just, for lack of a better word, mostly negative, right? Attitude. So on the asset management side, the ownership side, we push for change as quickly as possible as soon as we recognize that, and then we try and help screen for the positive, knowledgeable folks. Now, when I'm on the site, I also like to visit with the managers and the leasing staff, and I will show them basic math for NOI valuation. Uh, why do we want to raise rent $25 a month? Why is it so important to get a parking fee? And I will show them basic math in 15 minutes on why. And you can tell by their reaction and how they soak that in on whether or not they're really going to buy into the overall program.
Yeah. Yeah, because I could see that some people are just saying, well, $25, like really, why do I really want to work this hard to get an extra $25 on this unit? They don't realize that that $25 is not important on one unit. It's important when we do it on the 150 units, right? That's the multiplication factor. So yes, if you don't get $25 on that one single unit, is it going to make or break our year? Absolutely not. But if that's the attitude, that means you're not going to do it on all 150 units. That really can change the performance of a building pretty quickly, especially when we start adding up those $25.
Right.
It really multiplies. What's a key or maybe a couple key factors that separate a well managed property versus an underperforming property that you can actually affect? I mean, things that are out of our control, definitely, not maybe not worth mentioning that much, but things that are our control, separating those well managed, well operated, profitable buildings from the underperforming ones.
That's a tough question. So there are lots of variances, right? So it depends on the property and the location, but I think the underperforming properties, most of the time they're underperforming because of personnel, because of staff. Uh, I firmly believe that a property's performance is 90% staff. If they buy in, if they're good, if the residents like them, if they communicate well, they can make anything work. If you have bad staff, whether it's the office staff or the maintenance staff, you're going to have issues. That would be my very basic answer, I guess, on that.
Yeah, obviously it's very property specific in what's going on and how you're going to have to mold and adjust every single property. Daniel, on the financial side, what KPIs do you track most closely? Like, what are you looking for?
So I look at everything all the time, but when I have discussions with property management or with the staff, we look at occupancy, of course. We look at collections. We look at bad debt. We look at ways to collect that money. We look at growth over time for net rent. Uh, some good examples are recent deals that we've had at Endurus where net rent has increased significantly, even though occupancy has remained pretty stable. So we look for that growth. Then, of course, we monitor NOI. Unfortunately, a lot of things below the line or a lot of things, expenses are fixed. There's not much you can do there. So I tend to focus on revenue, which is also a positive aspect. So when you're communicating with the staff and property management, you're talking about positive things.
Yeah.
Things moves that they can make that are positive rather than negative. And I think that helps. But yeah, focusing on revenue, net rent, and then looking for, I don't want to nickel and dime people, but sometimes I want to nickel and dime people. If we can get another $5 for something that is not rent, so it's not necessarily advertised, I see that as a very big positive because it increases our revenue without increasing the advertised rent, gross rent for the property. So I think that's helpful as well.
Yeah, and on the expense side, I mean, it's great to cut expenses, but you got to be careful that you're cutting expenses to not actually make the property suffer, right? And that's really easy to do. Like if you're trying to cut your maintenance expenses, I mean, that how do you do that? Like how do you do that well and still have a good property?
Yeah, right. I mean, so the biggest, fastest, easiest way to save money is to cut staff, right? Payroll is your biggest expense below in the expense section. You can negotiate contracts every year. You can negotiate most trash contracts. Maybe you have a cable contract, printer, phone, stuff like that. You can negotiate, but the moves aren't big on those. Especially once you've operated the property for a couple of years, everything kind of settled in. Trash is what trash is. Electricity is what electricity is. So you look for operational efficiencies in staff. If you've recently renovated, maybe you don't need 3 guys anymore. Maybe you only need 2. Things like that you can look for. But I focus on the revenue lines as much as I can. I do dig in as the asset manager and I look through the financials. I comb through the expenses, look for extraordinary things that maybe shouldn't be there or that we might be able to save on next time.
Yeah. Or cut out. I know we've cut out some expenses that we're like, we don't really need that. That didn't add any value, especially like let's talk about marketing expenses. I mean,
Sure.
we have changed who we utilize for our marketing. It necessarily hasn't gone down, but it's changed because you look at those expenses and go, we're not really getting a lot of value out of this marketing, budget.
Right. So something that has changed over the last 35 years significantly is what the property staff is responsible for. 10 years ago, 20 years ago, your manager, assistant manager, and leasing agent did your marketing. You might have apartments.com or rent.com, whatever it is. But in general, the property did their own marketing. They did any Facebook stuff if it was in the time and what have you. Today, the management companies have not only that marketing person, but that person contracts it out. So you have these layers, right? Everybody's got to make $1 on it. So by the time you do, for example, Google ads through the management company, you're paying a 30% markup. One of the reasons we do Google ads ourselves. So there is some savings there. Same thing with surveys. We did surveys by postcard or phone call. Now there are companies that are utilized to do the resident surveys, and those are fixed costs. And that's one of the things that we've adjusted at some of the properties. It's only a couple bucks per month per unit, but a couple bucks per month per unit times 5 services adds up pretty quick. But yeah, so bringing that in-house has been very helpful, I think. For us, it also gives you more control. You're more nimble. A change you want to make today, you make today. It doesn't take a week to get it
done. Yeah. Well, is there a go-to source for marketing? When I first started, it was everything was Craigslist. Mm-hmm. You put it on Craigslist or you just didn't rent it out. What is it? Is there a certain platform right now?
So it depends on the market, right? So Craigslist actually still works in some markets. I think they're still using it quite a bit in DFW area,
Hmm.
especially in the C class deals, uh, maybe even C minus. In Kentucky, in Louisville, apartment list seems to work really well. Apartment list works extremely well in Lexington,
Hmm.
whereas in Ohio it doesn't work at all.
Hmm.
We've had
Interesting.
zero response. Apartments.com is, it used to be one of my favorite advertising sources. It's fallen to the bottom of my list because it just generates a ton of leads, but none of them seem to pan out.
Yeah.
So you might get 1,000 leads and one lease, and it's labor intensive to work through those, so it's very expensive in the long run to get a lease out of there. But we are pretty nimble, so we switch between sources as needed. Sometimes we even pay a little bit more for short term contracts so that we aren't stuck in 12 months of a service that doesn't work.
Yeah.
Uh,
That's good insight. Yeah, it's interesting that different areas, especially when you talk about Ohio and Kentucky, they're right next to each other, and one works really well, and in the other markets, like it's crickets. We don't see anything. Facebook Marketplace is an interesting one too. When you talk about a lot of leads for very little leases, I feel like that one is that still the case with Facebook Marketplace?
so I think marketplace depends a lot on the person placing the ad. So
Mm.
if marketplace, we do get very few leases from it, but we also don't get a ton of leads that they have to work with. Usually it's a one hit and gone. So I guess they message the marketplace ad with a DM, and usually that's it. That's all you hear. So it's not a lot of effort or time involved with it, or wasted with it. But those are best suited for instant reply, right?
Yeah,
And
for sure. You
so
got to be on
unless,
those.
yeah, so unless somebody's 100% dedicated and doesn't have anything else to do, and they have the ability to reply immediately, it's just not going to work.
Mm.
Instant gratification is what everybody on Facebook is looking for.
Yep. Yep. Daniel, when did you decide to raise rents versus, there's always that balance between a full, completely 100% occupied building,
Mhm.
and the best rents you can get. Like, when do you decide you're going to raise rents and, um, versus the occupancy type thing?
Yep. So, I mean, I look at comps. Everybody looks at comps, right? So you have to know what the comps are.
How often are you looking at comps?
I look at comps at least once a month, depending on how the property is doing. If it's suffering a little bit, then I'll look at them more often.
Yeah.
I even make calls to some of them myself, just to hear for myself what's happening on the other end of the phone. Uh, but in general, 90% are better occupied, or if you're 100% full on a floor plan, why wouldn't you raise the rent to see what happens?
Yeah.
A really good example is we've gone up 200 and some odd, 225 a month on 3 bedrooms at one of our deals, and the units are still leasing. And that, I mean, it has vacancy, but the manager's on board. The manager said, "Hey, I think we can get X, Y, Z." I said, "Okay, well, let's try and get X, Y, Z," and she did. She's getting it. So uh, that's huge. But yeah, anytime you're 90% or better, I think is a really good time to look at raising rents. And certainly when you're 100% on a one floor plan, there's no reason not to try it.
Yeah, I like that you said the floor plan thing too, because every floor plan is different. And so
Mm-hmm.
just because your buildings call it 90% or even 88% occupied, if you've got a 2 bedroom, 2 bath floor plan that is 100% occupied, it may make sense to raise rents. Probably it makes a lot of sense to raise rents on that floor plan. And maybe you have to lower rents on the other floor plans in order to get your occupancy back up. But it's certainly not the one that's 100% occupied that's hurting you.
Yep, that's right.
Um,
And then we look at the spread too. Sorry,
Go ahead.
I'll let you. Now, I was going to say we look at the spread between the floor plans as well to see if we can adjust that spread to entice people into a plan that's less popular.
Yeah. Yeah. It's if there's that could be the case, right? If you've got a 2 bedroom, 2 bath, nice square footage, and you've got that 2 bedroom, 1 bath, but it's just not renting for some reason. Well, maybe it's
Mhm.
because there's not enough spread there. Everybody's going, well, geez, I'll just pay the extra $75 for this two bath, right? Um, how what's kind of a big, maybe not the biggest or the biggest, but what's a big financial mistake that you see, or big mistake overall in general that you see asset managers make, property owners make, property managers make? What's a big mistake that affects the outcome of the performance that you see people make?
That's tough. I mean, there's always something, it seems like. Uh, I have a habit sometimes personally of not overlooking, but maybe underestimating bad debt or write offs. Uh, and I think that's a challenge too, because then if you overestimate overestimate it, you're not going to get your underwriting done right. So, and then I think at acquisition or transitions, I think probably the biggest thing that is either overlooked or people take a pass on is change in occupancy. Over the years, almost every deal I've seen that's changed management or changed ownership changes occupancy for the worse
Yeah.
during that change. Uh, it recovers, but it's an expensive change, right? And you don't
Yep.
normally account for that in underwriting or performance. Uh, and then the other mistake that I see from the property management side is contracts. They don't monitor contracts well, so I try and keep track of them. More and more companies are going to this. You can only give notice during the last 60 days between this window and that window. So you have like
Mm,
5 days. It has to be sent here by this method, et cetera. So it's harder and harder to get out of some of them.
yep.
So we track them. I track them internally and have a tracking sheet with a lot of detail for that. Management companies tend to just let it go.
Yeah. Yeah. That's the thing is if you've got to be monitoring everything. And that's where you come in handy, is because you're looking at all these various aspects. And if you're not, a lot of times the property management company isn't. They're in the weeds, they're in the day to day. These contracts sometimes are just, they're back of mind, right? And so if that's where the asset manager comes in and says, no, we're looking at all these things. These aren't back of mind, these are front of mind right now. We got to look at our contracts. We got to look at our occupancy. We've got to look at our bad debt. We've got to look at all these little things in the details so we can get it right. And that's where it's so important. Daniel, what are you seeing with the trends? Trends that tenant preferences, right? What are tenant preferences? Different trends that you're seeing that owners and property managers need to be aware of.
I'm sorry, preferences
Yeah,
for.
like what are tenants wanting today that is changing, or what are you seeing as far as, like, if I'm going to have a property, what should I be doing it to make sure I'm attracting the most amount of residents?
Again, that's regional dependent, right? And market dependent, sub-market dependent. I think at a lot of our properties, Endurus properties, the primary thing that residents or tenants or applicants look for is neat, clean, and straight, right? They want to walk into a unit that the paint's correct in, the floors are nice in, uh, the lighting matches. Sounds like silly things, but a lot of properties, when you visit them, they have yellow lights down the hall and white lights in the bedroom and
Yep.
blue lights in the bathroom. People notice those things, maybe only subconsciously, but they notice them.
Yeah, I don't think
Uh,
they're actually noticing it, right? They're just you. It's got that feel, the
yeah,
difference, right? They're not
yep,
saying, "Oh, that is wrong." They're just saying, "Man, this property feels good," or "This property just doesn't feel that good."
yep, yep. And we personally do a lot of cleanup when we acquire a deal. We do a lot of cleanup in the parking lot. We set up a towing system. I
Yeah.
believe that residents still look for clean parking lots. They notice that stuff as well when they walk through. Uh,
Yeah, if there's
and
cars up on cinder blocks, it's never a good sign.
right, that's right, that's right. And then the last one I think is the office staff, right? I mean, they rent an apartment. everybody just about knows this saying. Everybody's got four walls and a door, but they don't have you. Uh, and that's one of the most important things is the office staff. They have to make that connection with the prospect as they're touring, and they'll keep that connection throughout the prospect's life at the property. And I think they look for that. They look for a connection when they're touring.
Thinking about our properties again, Midwest, what are there any specific amenities, or like, just tenant outside of the unit that residents really want right now?
I haven't heard anything in particular that they're really looking for outside of the unit. I will tell you that experience has taught me that grocery shopping nearby is important. Easy access to things like the grocery store, a Starbucks, or similar drive-through coffee, uh, and fitness centers. Uh, Even if you have them on site, a lot of people still prefer the Gold's Gym or the LA Fitness for the programs that they have. On site, the washer dryer connections in the unit are always something that people ask about if you don't have them. Uh, but most of our properties, when we have the fitness center, they're used. When we have a pool, they're definitely used. So I think those are important amenities. Maybe a little expensive sometimes, but they pay off with tenant happiness. Uh, but easy access to the basic things like shopping are, I think, important.
Do you have a go-to amenity that you would add to every property if you had a limitless budget?
Huh. So an unlimited budget, I mean, sure, washer dryer connections in every unit, hard surface floors in every unit. Not only do residents like it, but ownership likes it. It's less expensive in the long run. I think there's a change in appliances, so I don't know how you address that, but we've gone from whatever color they were to black to stainless to printless stainless, so you didn't have fingerprints. To I have to have a three-sided stainless refrigerator, not a black-sided stainless refrigerator. Uh, to now white's coming back. I've seen new construction with white appliances.
Yeah.
Uh, the glass cooktops are nice. Uh, I think people are tending to like those. So I think, maybe with an unlimited budget, you have a selection that tenants can have. If you have a property that you're renovating, you give them a choice. I've seen a couple of properties doing that. You can pick this granite or that granite, and you can pick this appliance package or that one. And then there's an upcharge, of course, for it, but you're giving them a choice. So they buy in, and it's more of a quote unquote home. So I would imagine that you're driving or acquiring a tenant that's going to be more long term because they've bought in, right? They've made choices.
Yep. Yep. Last thing, let's talk about tenant retention. How do you incentivize tenant retention versus trying to get all new leases and have a bunch of turnover?
Yeah. So, I mean, tenant retention is tough, right? Closing the back door.
Yeah.
I think the most important
That's
part
a
again
huge expense. I mean, every
is,
tenant that moves over, you got turnover, and that's
yep,
a big expense, especially with labor up.
yep. So that's another thing. I like to teach the office staff what it costs to turn a unit, including the vacancy portion.
Yeah.
But resident retention, again, it's based on in the office. So we like to have monthly functions at the properties for the residents, put on by the office. And then another thing I've found that's helpful is staggering renewals, of course. But when you're renewing, especially at market rate or above, if somebody's already at market rate and you're trying to renew them for $25 more than market, that you're offering the same incentive to that person to renew as you might be to somebody moving in.
Hmm.
And maybe you set that for 2-year renewals, right? So they've been lived there for 2 years. Now they get that renewal offer
Yeah.
that matches the incentive. Because the first thing people do when it's renewal time is they go to the internet, and if they see that you're offering 1 month free to everybody else except them that live there, you know, there's not a whole lot of incentive, or there could be more incentive for them to renew. Uh,
Yep.
so that's a program that I think works pretty well.
Awesome. Yeah, it's a big expense. Losing your current residents, not only does it hurt the income side, but again, that turnover is expensive. So Daniel, anything else that you want to mention about asset management that we haven't covered?
No, I think we covered quite a bit of ground this time,
Yeah, we
Todd.
covered a lot of ground. Well, I really appreciate you being here and spending some time with us talking about asset management. So it's been a lot of, we were asset managing our portfolio prior to Daniel, and it's been such a experience bringing him in because we thought we knew a lot until we brought Daniel in, and then we realized we knew very little. Uh, and you're always learning too, of course, but
Oh
it's
yeah,
like it's just amazing how much you don't know until you've got somebody that you bring in that knows a lot more than you. And so it's been a lot of definitely a good experience. And anybody who's you know, growing their portfolio, I would highly suggest at least a part-time asset manager, bringing that person in to really look over what's going on with the property, whether you're managing in-house or third party.
I
So,
agree. I think that'd be important.
yeah.
Sorry.
Daniel, again, appreciate you, and you have a fantastic rest of the day.
You too. Thanks, Todd.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.